Hi, here we're going to talk a little bit about how to qualify for these programs. We have the FHA, which is Federal Housing Administration. We have the VA, which is Veterans Administrations for our vets that served in the armed forces. And then, of course, HUD, which is Housing and Urban Development. The government is not in the business of lending money, but they do insure the loans. In the event that the borrower should default on the loan, the insurance policy would then go into place, and this is how the investor would receive full payment, and the government would be the one responsible for that property. And that's where you've seen HUD homes come in. HUD homes were FHA loans that were insured by the federal government that defaulted, and the government takes that property back as a repo, if you will, as a foreclosure, and they also offered for resale through their property disposition department. Okay, the program is very lenient, okay, very flexible and easy to qualify for. The minimum requirement out of pocket is 3.5%. Okay, the FHA will loan 96.5%, excuse me, of the loan amount, which means you need 3.5% as a down payment. But the guidelines that the FHA offers tells us that this money can be a gift from a family member, a non-profit organization such as a church, or a municipality such as a city, the county, or the state of California. For example, CalHFA, California Housing Finance Agency, is just one of those agencies that their primary function is to increase home ownership amongst low to moderate income families. They will help you with the down payment in the form of a gift, in the form of a loan. You must know, however, that the majority of these programs are currently suspended for lack of funds, as our budget is not there yet, and we don't have funds for these programs. However, we understand that a lot of the TARP money, a lot of the money that's coming from the government for the federal bailout is being sent directly to the states. In states like California, Nevada, Arizona, Texas, Florida, the ones that have been the hardest hit by these downturn in the market are the ones that are going to receive money that can be utilized for this very purpose. So what we're saying is we anticipate that CalHFA and other programs similar that help low to moderate income first-time buyers will be in place very quickly, because the first thing that we need to know, and this is the one thing that we all agree on, is we need to get our real estate market up and going again. We need to get out of this slump, and the only way to do that is to eliminate the inventories. In other words, to get the homes sold, get people moved into them, and get the market and the economy moving again. So again, we expect to see these funds available very shortly. But you still have the programs that can be through a family member as a gift, and you certainly have the non-profit organizations, and there are some municipalities that already have funds available. So you will need a very minimal investment. You need a $2,000 deposit anytime you're going to make an offer on one of these properties. But again, the remainder of the money, we can help you find it. There are sources for it. So don't think that you don't qualify. Now, the next thing that you look at, that would be your ability to qualify for the loan. The ability and willingness to repay the loan is how you qualify. Your ability to repay the loan is primarily your income versus your outgo. How much money is coming into the household versus the responsibilities that you already have. However, you can have a cosigner on FHA loans. FHA loans will allow for a non-occupant cosigner or an occupying cosigner. So you can associate yourself with a family member, with a friend, and you can do this to get into a home. It is imperative that you try to... That would be your income, your ability. The willingness to repay the loan is primarily your credit history. The FHA looks at the last 24 months, but it's very lenient as far as your credit scores are concerned. We're currently looking at credit scores of 580. If your score is under 580, oftentimes we can look at your credit and see what we can do in order to improve your scores. There's many things that affect your score, but certainly the limit that you owe on an existing account, the way that your payments are being made, and so forth. This gets a little more technical. It would probably be best to call in or come in and talk in person, but we can definitely look at your credit and give you some pointers on what you can do, what accounts to pay off, what accounts to leave alone in order to have a greater response on your credit scores. But the program is very lenient as far as credit. In fact, you do not need credit scores to qualify for an FHA loan. If you have no credit, have never had credit, that's quite all right. It doesn't require it. We do what's called alternate credit. So we may look at a bill from the utilities, for example, or a cell phone or a membership to a gym or something to that effect, and we show a history of you making payments on this on time, and we use that as what's called alternate credit. So again, credit is very lenient, very flexible. Income we talked about. The requirement is 2 years of employment, continuous employment. It does not need to be the same employer, but you do have to have a 2-year history of having been working. So if you left one employer to receive higher compensation, to get closer to home, to get better hours, these are all factors that will allow you to do so. The other way that we can do this is if you do not have a 2-year work history, but you have a degree, you will be able to qualify. You have a vocational training, or you have some special training. As long as you've received certificate, and this is one of those programs that goes from 6 months to a year or longer, the FHA will oftentimes accept that as your work history, so long as you go to work in the industry that you prepared for. I can give you an example of one of our clients. A young lady received a nursing certificate as an assistant nursing certificate in a program that she took that required 8 months of schooling. Directly out of high school into the training program, receives her certificate. She's now been on the workforce for 6 months in the field that she studies for, and she qualifies for a loan. Basically, everyone qualifies for this program. However, some will qualify for a smaller loan amount and some will qualify for a greater loan amount. It's going to be based on your income, and it's going to be based on the debt that you already have. But this program is really very lenient.